FA1 Key Terms Part B. Recording and Accounting for Cash Transactions. Chapter 5. Receiving and Checking Money. Remittance Advice. Remittance advice shows which invoices a payment covers. Receipt. Receipt is a document given by the seller to the buyer when goods change hands in exchange for payment. It may be a till receipt, a written receipt, or some other form of receipt. Receipt. Receipt refers to the act of the seller accepting payment and the payment itself once it has been accepted. Cash. Cash comprises the notes and coin which make up the legal tender of a country. Check. A check is an unconditional order in writing addressed by a person to a bank, signed by the person giving it, requiring the bank to pay on demand a sum certain in money to, or to the order of a specified person or bearer. EFT/POS, Electronic Funds Transfer at Point of Sale. EFT/POS, Electronic Funds Transfer at Point of Sale, makes possible the automatic transfer of funds from a customer's bank account to a retail organization at the point time when the customer purchases goods, or services, from it. Chapter 6. Banking Monies Received. Clearing. Clearing is the mechanism for obtaining payment for checks. Banker. Banker is someone who will do the following: put money and checks received on a customer's behalf into his account. Take out all checks and orders paid from the account by the customer. Keep accounts such as current accounts, which can be used for paying in or taking out on the customer's behalf. Customers. A person becomes a customer in respect of check transactions as soon as bank opens an account for him in his name. In any other situation, for example when investment advice is given, a person becomes a customer as soon as the bank accepts his instructions and undertakes to provide a service. Agency. Agency relationship is one where one person, the agent, acts for another, the principal, usually for the purpose of doing business between the principal and a third party. Duty. Duty is a task or action which a person is bound to perform for moral or legal reasons. Float. Float is the money kept in the till at the end of the day so that the next day there is some cash available to give change to customers. Chapter 8. Authorizing and making payments. Check requisition. A check requisition form is simply a form requesting that a check should be drawn to make a payment. Expenses claim form. Expenses paid by an employee for which the employee wants reimbursement should be itemized on an expenses claim form. Chapter 10. Maintaining petty cash records. The impressed system. The impressed system is a system in which there is a maximum amount of money in petty cash, the impressed amount. The impressed amount varies from one organization to another, and might be enough to make petty cash payments for about 1 month. Sale tax receipt. A sale tax receipt is a receipt showing the following: the total payments, the sales tax paid, the supplier's name, address and sales tax registration number, the date of the payment. Chapter 11. Bank reconciliations. Cash book. The cash book of a business is the record of how much cash the business believes that it has in the bank. Bank reconciliation. Bank reconciliation compares the balance of in the business's records to the balance held by the bank. Differences between the balance on the bank statement and the balance in the cash book will be errors or timing differences, and they must be identified and satisfactorily explained. Bank statement is sent by a bank to its short-term receivables and payables, customers with bank overdrafts and customers with money in their accounts, itemizing the balance on the account at the beginning of the period, receipts into the account and payments from the account during the period, and the balance at the end of the period. These statements may be produced monthly, weekly or even daily depending on the volume of transactions going through the account.